Hello and welcome to Crypto Weeklies. In this video, we discuss Algorand and its token Algo. None of the content is financial advice. Right now, the price of Algo is coming in at around 26 cents. It represents a rally from that green level on this weekly chart of Algo. From that 19 cents, the price did touch that yellow zone, like we discussed on the channel several months ago at around 32 cents. From that level, again, that level acted as a resistance. Now the price is coming close to the 20-week simple moving average and the 21-week exponential moving average between 21 cents and 23 cents. Those are the key level to watch. To the downside, to the upside per this technical analysis is the 32 cents level, and then all the way to about 75 cents. A lot of air gap between those two levels, especially since, as you can evidenced by the rally in the bull run of 2021 as well as the crash in 2022 from that 75 cents, the price did come crashing close to that 30 cents in a matter of weeks. And again, apart from some time spent in those levels, back in November, December, and early January of 2025, we haven't seen much of the time spent between 32 cents and 75 cents. Coming to the so this is the estimated bull run target for Algo as a confluence of several models. Again, that's the outlandish or a stretch goal for Algo, coming in at around $3.80, provided that all the individual risk based models go to that 95% risk. Right now they are at 2%, 0%, and 29% risk respectively. That's why the weighted risk is at around 6%. uh, Coming to the past market cycle and behavior around those resistance, last time around in 2021, price did go close to that $3 level. Also in 2019, when Algo was launched, the launch was at around $3.17. But you can see there was a divergence in terms of, this is the price chart. The highs were made in 2019, but the market cap view was totally different. 2019 market cap was at around 140 million. Now the market cap is at around 2 billion. That's because I think back in 2019 only fewer tokens were released, and the max supply kind of ate out all the gains that the price the market cap made, and that did not get reflected in price. That's because lots of tokens back then were to be entered into circulation. Right now the circulating supply is almost 87% of the max supply of 10 billion. 8.7 billion are in circulation, one of the best in terms of the tokenomics. You can see over here that at a higher level, again you can see Bitcoin at around 95% already released, XRP 60%. Most of the layer 1 cryptos don't have a max supply. ADA about 79% released. Stellar and XLM 62% released. Algorand is at number 43rd spot, about 87% in release. Again, Caspa slightly better, 92% release, but you get the idea. Most of the cryptos don't have that kind of already existing tokens in circulation. If we go and check the homepage of the website cryptoweeklies.com, the link on the bottom of your screen, all the charts available for free and updated daily, personally developed by me. If you like this content, you can give a like and subscribe to stay updated and help grow the channel. This is the machine learning based price forecast using seasonal ARIMA, LSTM, and XGBoost based forecast models trained on the price action since the token launch in 2019 at a weekly average price. The non-euphoria bull case forecasted by this model is captured by this yellow line, which is the one standard deviation confidence level, which says with 68% confidence the price action towards the end of the year could as again we go towards November December time period, could be somewhere between 45 cents and about 55 cents. That's the non-euphoria target for Algo from, let's say, October till December 2025. The euphoria target, if let's say there is a 2 standard deviation rally in the crypto asset class, where the asset class rallies in a euphoria phase, the price for Algo in, let's say, late November is forecasted between 95 cents to all the way to about $2 level. The weekly average prices are kind of curious. You can see back in September to November 2021, the weekly average price were only $2, whereas the eventual high for Algo back in September was at around between $2.45 and $2.83. That's because on this forecast model we don't take the high OHLC or open, high, low or close values. We take the weekly average trading values. That makes a more realistic scenario than identifying the top to the dot at a, let's say, minute by minute candle level or day by day candle level is much harder than forecasting the weekly average in a potential bullish scenario. Again, all in all, the $2 level requires some sort of euphoria to get to there, or a 2 standard deviation bull case with 95 percentile confidence that the ceiling is within $2. Only a 5% chance that the price action for this remainder of the bull run for Algo goes beyond $2 level. So coming back to the regression based, polynomial regression based fair value estimation, this pink line, which is a polynomial regression based fair value estimation for Algo, cuts the price action, attempts to cut the price action in half with a sine wave kind of a outlook, where the price action based fair value goes down in the bear market and up in the bull market, accounting for that 4-year market cycle theory, as well as the bullish and bearish boom and bust phases in the asset class. For this model, the fair value for Algo is at around 56 cents. That means Algo is almost at more than 50% discount from the fair value. And what is more curious, if you apply 1 standard deviation residual to this fair value, this green line which has identified major bottoms for Algo, you can see over here accumulating below the green line. Again, not financial advice, but historically speaking, has not been the worst time to do that. Right now this green line is in an upswing, as the asset class, that is the crypto asset class, and in general, and Algorand in particular, is exhibiting a series of higher highs and higher lows since October 2023. So if we are here for the remainder of 2025, that is the asset class were to rally in the remainder 1.5 quarter of 2025, the 1 standard deviation residual based discounted fair value accumulation level for Algo is coming in at around 32 cents. So anything below, or any price action below 32 cents at this level, is considered an asymmetric bet per the regression based analysis. The opposite of this green line, which is the 1 standard deviation residual drawn to the downside, is this yellow line, which is 1 standard deviation residual drawn to the upside from the fair value. That 1 standard deviation residual does provide a entry point or a logical level if the market cycle were to top the non-euphoria bull run peak, as estimated by the regression based levels, is at around 97 cents at this point. Again, the function is in an upswing. So what is 97 cents today? As the model reacts to the dynamic nature of the price action, tomorrow that level could be at around $1 or $1.10 in the next weeks to months. But the beauty of this model is this is a live model. This is not some retroactively fitted model to fit the narratives. It only reacts to the latest price action to minutely make its assumption based off the upswing or the downswing of the regression based function. So long story short, right now the 97 cents level, for if Algo were to reach that level today, that would be indicative of a massive euphoria based sell off for Algo. But we are several levels away from there. We are not even at the fair value, nor the 1 standard deviation residual applied to the downside to the fair value. If we are trying to be more bullish in the sense that instead of looking at the yellow line, which has captured some sort of a non-euphoria bull run targets back in December January 2023, but when major euphoria occurs, the price action does go to the orange line, which is the 2 standard deviation or the 95 percentile ceiling, as you can see back in 2021 in February, as well as in September till December 2021, as well as in December 2024. Rallies do go to the 2 standard deviation 95 percentile ceiling. That level for Algo is coming in at around $1.68 or 70 cents at this point, and I wouldn't be too surprised if that 2 standard deviation ceiling goes to $2 in November December 2025. So that's again one area of confluence between those the model, that is the regression model, and the machine learning model, they are distinct model. They don't talk to each other. They work in silos, but there is this confluence among these models. And again, also with that red line over here, this is a technical analysis based level. If we were to account for, let's say in 2019 price action went to this $3.20 target, in 2021 went here, and now let's say if we are trying to estimate this ceiling over here, let's make a color different color from the other colors over here, then they could meet at some point between $1.50 and $1.70. Again, that's another outlook for Algorand and its token Algo's price action ceiling. If we were to try to estimate what is the current risk-based accumulation level, it's only 2% risk at this point per the model. In 2024, the risk levels did go to 0.28 and 0.46. So if we were to forecast in the future, if let's say right now using the same regression based levels, if we were to look for any peak regression based ceiling, it's at coming in at around $1.43 at this point in August. Again, confluent with this lower macro market cycle highs as estimated by this white line over here, meeting the potential red line at around $1.45. So that's where the regression based dotted 2 standard deviation at a daily level is. This is at a daily level. You can see the current price 26 cents as of August 16, and risk levels are 2% or 0.02. Anytime if we were to look for any narrative wherever accumulation occurs below this dotted red line, and especially in this purple zone, it's not the it at least avoids the bubble phases of the asset class that is marked by this gray color. If we were to look for any intermediate peaking levels, the again the conservative estimate is between 0.2 and 0.4 risk. 0.2 risk for Algo is at around 45 cents as forecasted, and 0.4 risk is at around 76 cents. So those are some of the conservative target for Algo, that is still a 3x from the current price. If Algo goes to that 0.6 to 0.8 risk, the price forecasted is in that level, in that scenario is between that $1.10 and $1.40. Again, coming confluent with that dotted red line over here at $1.45, and the red line over that technical analysis section as well. Coming to the time weighted average price, right now the price action has stayed below the blue line since the last major. Again, if you exclude this noise in a couple of days in December 2024, major major levels or major times since the time weighted average price acted as a resistance was since May 2022. So it's been a while since Algo has rallied off this time weighted average price. So that remains to be seen if Algo were to participate in, let's say, the last leg of the bull run in towards the end of year 2025. The time weighted average price coming in at around 46 cents, accumulating below that level, not the worst idea, with the hypothesis that there is one scenario where in future where the price action breaks out of this blue line and then tries to replicate what Algo did in late December, early January 2021, from that point till April 2022. So that kind of a phase is ahead of us. In that scenario, that accumulation below the time weighted average price is levels at around 45 cents at this point. All in all, as we discussed, the estimated bull run peak is around $3 and change. That would require all of these individual models to go to that highest risk level. And again, one thing to note is right now the ETH risk level is at around 0.86. So again, there might be a cool off from based on this levels, at least in the ETH rallies. And I don't know how that affects Algo, but the overall bull market completion as estimated by the top 100 cryptos by market cap based on their price based journey, if they are rallying their alpha, volatility, beta, risk adjusted return, percent drawdown, one single snapshot of risk between 0 and 1, Right now risk levels at around 46%, that is bull market completion is also at around 46%. You can see this is not a linear process. In December the completion was at around 60%, but then till May and April 2025, risk levels fell down to less than 20% for a brief period. Now they were above 50%, and as of yesterday the risk levels are at around 46% or 0.46. So that also helps identify if there is a 2x from here in terms of the completion of bull market, in terms of the market caps of any individual crypto, and Algo being at further ahead in the risk analysis or risk curve, uh, would be able to garner more than 2x from that last leg of the bull run. Right now the narratives are definitely controlled by Bitcoin and ETH, although the overall market is bullish, as evidenced by the crypto related narratives on social media platforms and their term frequencies on YouTube and X over the last 7 days. These are the popular narratives. At this point Algo is not over here, but it's under the wider umbrella of this altcoin narrative, which is again a smaller narrative than Bitcoin and ETH at this point. And you can see that that is evidenced by the rallies over the last 90 days are largely controlled by ETH, and over the last 30 days definitely the seasonality is favoring ETH at this moment. So but over the last 24 hours you can see Algo has been leading at around $3.25% change or gain over the last 24 hours. Over the last 7 days, ADA is leading the pack. Algo is still down about 1.5% over the last 7 days. All in all, the most area of confluence is this red line at around $1.45. With that, I'd like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.